All right, welcome to today's show. So, Bitcoin mining revenue just hit $3.7 billion. GameStop is going crypto. There's a question mark on that, but it looks that way. And of course, strategies leading the Bitcoin revolution. So, whales are making some major moves. We're going to talk about that today. And finally, are we going to be going to 138,000 in Bitcoin? Let's talk about some price targets here. Okay, let's jump into it. So let's talk a little bit about Bitcoin mining just very quickly. Revenues hit 3.7 billion in Q4. That is a 42% increase from the previous quarter. In Q1 of 2025, right now it's tracking $3.6 billion in revenue. So here's the key. After there's a surge, right? And there's been a halving recently, and it seems that miners have adapted fast. And so the hash rate has hit all-time highs in January. And so basically why this is important to you, I'll tell you in one moment. How fast the computer can guess the answer to the crypto puzzle to earn more Bitcoin. That's what hash rate is, all right? So it's like the speed and the power behind the computer that allows it to answer these really complex puzzles so that these miners can earn more Bitcoin. And they're using these energy efficient machines. And they're also shifting to like cheaper locations like Africa and Latin America. So the tip on this is when miners upgrade and they expand, that is bullish for Bitcoin long term. So that's why it means something to you in relation to Bitcoin and MicroStrategy. All right. So this is an interesting tidbit. And I think this is kind of important to hit in on this point because Saylor talks about digital energy with Bitcoin. And I think this is a really important point to break this down of why he talks about digital energy and to compare it to what's going on in the mining space right now. So there's a company called Crusoe Energy, and they're famous for mining Bitcoin using what's called flare gas. And so basically what that is that's wasted gas from oil. So it would be wasted gas from oil. And what happens is Crusoe uses that to power computers to mine Bitcoin. So it takes the energy that would be wasted and it literally takes it and it uses that energy to mine Bitcoin. Now, they just sold their mining operation, this Crusoe company, to NYDIG, which is basically like a New York digital asset group. Okay. And they're now shifting, which is interesting. This Crusoe company is now shifting to more of an AI infrastructure. So they're basically going to use this energy for an AI infrastructure with data centers. So it's pretty fascinating to see that they're moving from mining Bitcoin now to powering data centers. Now, here's what this tells us. If you're a strategy fan or a Michael Saylor fan, and you've watched any of his videos and you hear him talk all about digital energy, this really describes what he's talking about here. Okay, so bear with me here, but it's kind of interesting, and I thought I would share it. So we know that these mining firms are they're diversifying smartly in times like right now. And as Saylor says, he says Bitcoin is digital energy. So whether you mine it or use it to fund AI, it's all about the value of energy. So the interesting point is Bitcoin is digital energy, meaning it's a way to store your monetary energy. So you've heard Saylor do interviews on this all the time. Obviously, he has many degrees in engineering. He's an MIT grad, super bright guy, but he talks about monetary energy all the time. And the whole idea is if we're going to take our hard work, where we work all day long, and then we're going to store that and put it into monetary value, it makes sense to put this into Bitcoin because Bitcoin is digital energy. And the whole idea behind this monetary energy of this digital network that we're all involved in called Bitcoin is you don't want your monetary energy to leak. You don't want it to be subject to inflation, and you don't want it to be wasted over time. So it's like taking your hard work, your value, and it's putting into something that can't be diluted. And so I think this is a really interesting point of we don't want our monetary energy diluted. We work hard, whatever money we have, we don't want it diluted. And we know that when it sits in the dollar over time, it actually gets diluted. In fact, James from Invest Answers was sharing a video recently where he was talking about the increase in the money supply. And since the year 2000, the money supply has increased over 25 years, I think by something like 360%. So when the money supply increases like that, and there's printing of money, then there's a clear decrease in the value of our monetary value in the dollars we hold or the assets that we hold. So we to outpace that, we actually have to earn more money, number one, or our investments have to outpace that printing of money, and that increase in the money supply that's taken place since the year 2000 at a rate of 366% over the last 25 years. That's a big freaking increase, right? And we know that money supply and money printing, the increase of this has not been a new thing since the year 2000. It's gone all the way back since the beginning of time, where over the last 100 years, you can see the money supply and the printing of money, I should say, has gone up by an average of 7% every year. But from 2000 to 2025, that's a huge increase in the money supply, a huge amount of money being printed, which means your monetary value decreases in value. And the idea was another chart that he was sharing, or I think somebody else I was watching last night was talking about in 2020, you had your dollar, and now in 2025, your dollar buys 74 cents worth. So there's been a 26% decrease in the value of your dollar, which is wild, right? Wild. So this whole concept of like, if we're paying attention to like what miners doing, and they want to use energy efficiently to mine Bitcoin. And it's talking about this group right now that I was just sharing, this energy company that is using flare gas. So the oil, when the oil's used, there's gas that would be wasted. And so they're using wasted energy to put it into the Bitcoin network and mine Bitcoin. So energy that would be completely wasted is now being put into a Bitcoin network to store monetary energy. So it's fascinating how Saylor talks about energy in different forms. And you can be looking at this as energy in the form of oil with this wasted gas that we can now recover that energy and use it to put it into a monetary network like Bitcoin and preserve the energy and put it into monetary value that's going to go up in value versus the dollar, which is going down in value. So it's really fascinating to understand this whole concept of energy. I mean, I've been watching Saylor for the last 5 years, so I've heard him talk about this over and over and over again. And when you hear stuff like this, it really clicks of what's going on. So it's a smart way to preserve energy that's being wasted. And that's what some of these mining companies like Crusoe companies actually doing. But now Crusoe is shifting. So instead of using that energy to mine Bitcoin, they're using it to power AI data centers, computers that train and run artificial intelligence. So they're looking at it and they're like, hey, we've got this formula down of preserving wasted energy. We can put it into the Bitcoin network, which they've been doing, or we can take that energy and we can put it into AI, and we can use energy to fund intelligence. So you can use energy to fund, like these companies been doing, to put it into the Bitcoin network, and you can use wasted energy and put it into monetary value and fund monetary value, or you can take this energy and you can put it into AI, which funds intelligence. So you have energy funding intelligence or energy funding money. You see what I'm saying? So this is the whole concept that Saylor comes from in his approach to digital energy, which is really, really fascinating. So what he's saying here is that, and the smartest thing we can do is preserve that energy, whether that energy turns into Bitcoin or whether that energy is used to power AI. You want to preserve your energy. You don't want to waste your energy. So we're in like this kind of new energy economy, you could call it. And the key is not wasting it. And that's what Bitcoin does. It preserves your hard work, your energy at work, and it takes your energy at work and it puts it into a monetary network that's going to preserve your energy in the form of value, which is Bitcoin, which is amazing. So Bitcoin equals store energy, stores your energy and your monetary energy. AI uses energy to build intelligence. All right. So these companies that are figuring out energy efficient ways to either mine Bitcoin or run data centers, they're using wasted energy to create intelligence or money in the world. And this is freaking powerful, man. So don't waste the energy, digitize it, preserve it, use it to build a better future, whether that's with Bitcoin or AI. And that's the message. So that's the basic message around this whole concept of energy, which I think is very, very fascinating. And in summary, it's cool that the miners are flourishing right now and the hash rate is going up, which means there's a huge amount of power going into these computers right now. The computers are working, which means they're earning lots of Bitcoin. And so the fact that these miners are still earning lots of Bitcoin is a really good bullish sign for Bitcoin, despite the fact that the supply has been cut in half in 2024 and it halves every 4 years, and they're still mining Bitcoin because they're finding more energy efficient ways to do it, which is super awesome. Now, next step is GameStop. You probably heard the news around GameStop. Just approved a new investment policy to actually buy Bitcoin. So they're planning to raise $1.3 billion through convertible notes. If you know anything about the convertible note strategy, this is the same playbook that MicroStrategy has been running. That strategy's been running for the last 5 years. And so what it is they borrow money. That's what a convertible note is. You borrow money and then you use that money to buy Bitcoin. So GameStop is using the exact same strategy that MicroStrategy is using to actually use convertible notes, meaning they're going to borrow money and they're going to go buy Bitcoin. So that's pretty cool. The fact that they're following Saylor's playbook. We all know that Saylor's been meeting with the CEO recently, and there's been many pictures of them, and now it looks like it's going to become official, which is damn cool, right? Now, the cool thing about GameStop is they got $4.77 billion in reserve. I think if you look back last year, about a year ago, and I'm going from memory on this, their reserves were like $1.3 billion or something like that. So now the fact that GameStop has $4.7 billion of reserves, they're looking to do something with it. And so it looks like they're going to put $1.3 billion of it into crypto, and they're going to use the convertible note strategy. And the cool thing about the convertible note strategy, if you don't know anything about the convertible note strategy, it's a cool thing because with the convertible note strategy, they're not actually reducing the common shares. So they don't have to issue common shares to actually buy more Bitcoin. So they're not diluting the common shares. So that's pretty dope. They're implementing the MicroStrategy playbook. I mean, is this cool or is this cool, right? Yeah, I know GameStop price did dip some today, but it was up 15% the other day since the news. There's news that some people are shorting it, but who knows, right? But I think it's just cool long term. Look at what they're doing. I think it's also interesting that last year they had about $1.3 or $1.4 billion in reserves, GameStop. And this year now they have $4.7 billion in reserves. And now they're taking $1.3 billion, it looks like, and they're going to be putting it into Bitcoin. So it's interesting. The reserves have grown by like $3 billion over the last year. And they're taking, I guess, the base and putting it in. I don't know if there's anything whatever with that. Like that could just be a coincidence of what I'm saying, but that's the basic plan. So that's fascinating. And pretty damn cool. I know John's like, I just want my bags to pump. I do too, right? I want my bags to pump too. So these are good indicators. I'm going to talk to you a little bit about why the bags might be slow at this point as well. So I'm going to address that in just a moment. So the board is now allowing Bitcoin and stablecoin investments for GameStop. The CEO, Ryan Cohen, was seen with Strategy CEO Michael Saylor. Is it a coincidence? Of course, we think not, right? So let's zoom in. A little history of Strategy. If you didn't know this about Strategy, formerly MicroStrategy, they did an IPO in 1998, and it was at $6 at the time. And during the dot-com bubble, they hit about $313 stock price. And then in 2002, you remember that whole dot-com bubble that hit? They crashed all the way down to 45 cents in 2002. And now today they're back up to $300, which is kind of cool, right? So a $10,000 investment at IPO time back in like 98 for a Strategy would have hit $521,000 at the peak. Then it would have crashed to $750. And then it would be back up to $500,000 right now. And a $10,000 investment at the all-time low would be worth like $6.7 million today. So pretty cool stuff of what's going on with Strategy. But we all know that instead of fading out of the picture, Saylor, our fearless CEO, decided to move into Bitcoin and accumulate Bitcoin. And now Strategy has 506,137 Bitcoin for a value of about $42 billion. And we know they just raised another $711 million to buy even more, and they've started buying that as well. So just clarifying again, what are convertible notes so everybody knows what they are. It's basically debt that turns into stock later. So it's debt where you go out and you're like, hey, loan me some money. And then people loan them money. And then the company, like GameStop's about to do, is they take that money and they go and they buy Bitcoin with it. And so there's the way that they're doing it with these notes is there's no interest payments right now. So in many cases, they're getting a 0% interest payment. And so what it does is it gives these investors who are loaning the money, it's like the investors are like, okay, take my money. And the investors are fine with not getting any interest paid on it in most of these cases. And then at the time, they get to convert into stock. And so in the future, they can convert into stock at whatever the stock price point is in the future that they want to convert. And so it gives the investors upside potential, and it also it makes sure that companies like Strategy are doing this, and GameStop that are doing this, and Mara that are doing this, that they don't have dilution that's in immediate stock dilution. Okay. So this is how Strategy does it. This is how Mara does it. This is how GameStop is going to be doing it. We know that Strategy still has their 21-21 plan, raised 21 billion in equity, 21 billion in debt. So in equity, it's just where they issue stock. They basically issue more paper. Issuing paper is kind of like what the US does. They issue paper. They issue dollars, right? Well, in a stock company, you just issue paper. They basically print paper and people pay them money for it. And the whole thing, somebody asked me on this, on the last show that I did, they're like, what is the MNAV premium? What is that all about? It's basically, if you look at Strategy's net asset value of their Bitcoin, like what's the net asset value of their Bitcoin? So what do they have on the books in Bitcoin? What's the net? And so if you look at Strategy, it's around 40 something billion dollars of Bitcoin. And they're trading at a premium to that Bitcoin. So right now, investors are literally willing to pay double for Strategy stock compared to the amount of Bitcoin they have on their balance sheet. So that's what's called trading at a premium. People are willing to pay more for it. So just that very fact shows that when the NAV premium, the net asset value of their Bitcoin, the stock is trading at a premium for that, means people are willing to pay more for that. That's all that means. And at today's rate of what it is, people are willing to pay 2x the value of their Bitcoin, double. So and way in the beginning when this came out, you had all kinds of analysts and people who are bearish saying, well, people are crazy, Strategy's overpriced, and the premium that people are paying for the stock is like through the roof. It's ridiculous. And then some analysts are saying that, not all. And then the premium went up to 3, and then the premium went up to 4, and then people started to take notice and be like, whoa, what the hell is going on here? And the idea is simple. It's like, you could just go buy Bitcoin, which is what Strategy does. But because they use leverage, which allows them to take other people's money and buy more Bitcoin. So it's kind of like this. Strategy has $1 of their own money, which in the beginning, they had their own money, their own reserves, and they just bought Bitcoin, right? Well, they didn't just deploy that as their sole strategy. They're not like, hey, we're just going to take our reserves and go buy Bitcoin. What they decided to do is they're like, we're going to go borrow money and buy more Bitcoin. And then we're going to actually go issue more stock and buy more Bitcoin. And now we're going to come out with these new preferred stock offerings that are for insurance companies and institutional investors and endowments, companies like BlackRock that want income producing funds, Fidelities that want income producing funds. So they now opened up a new market to go, we're going to raise more money to buy Bitcoins through Strike and Strife, which are these other preferred stock offerings. So now you have a company that's using like almost 4 times the intelligent leverage that an individual could use just to buy Bitcoin. So when one goes, well, they're over leveraged, they're actually not over leveraged at all. The amount of debt that they're using to buy Bitcoin right now is not a huge amount of debt comparatively. And so they have 4 different ways to buy Bitcoin. So where you and I could go out in the marketplace and we could just go buy Bitcoin and be like, hey, I'm going to buy $1 worth of Bitcoin. That's our money buying Bitcoin. Strategy, same thing. They take their reserves, buy Bitcoin, but they're not just doing that. Issue stock, borrow money through convertible notes, Strike offering, Strife offering. What else are they going to come out with? So now you have 4 ways to raise money to buy Bitcoin. There's no wonder they are the dominant force in the marketplace, and they have gobbled up 2.4% of the supply. And you now have a company, if you do the math on 2.4% of the supply, what's that? If there's 21 million Bitcoin and they have 2.4% of the supply, we know that they're never going to sell their Bitcoin. So that's a percentage of Bitcoin that's never going to be sold. And so like that creates price stability to a certain degree because they're never going to sell it. We know the number of wallets of the people have lost their Bitcoin is another like 5,000 worth of Bitcoin. So right there, I mean, you got 5,000 of Bitcoin that can never be sold. And then you've got 5 million of Bitcoin that can never be sold. And you got another 16 million, right? And we've only got 1 million left in the supply because like 20 million's already been bought. And I think that's the thing that people really haven't wrapped their heads around yet, because you have a new marketplace that doesn't really understand what's going on. And so as we're looking at this whole game, we have, and this is going to explain to you a little bit of why this slowing a little bit, of people are waiting for the price to jam up and the price to go higher. And they're like, well, I want it to rip. I want it to rip. We all want it to rip. Yeah. But if you look at these indicators that I'm talking about, I mean, you have 20 million Bitcoin that are already bought, practically. Might be 19 and change. So you only have 1 million left. And so when you look at these countries that are coming to the game that really haven't grasped that concept yet, the US hasn't grasped the concept yet. We're the first ones to put it on the table and go strategic Bitcoin reserve. Has the US and have members of Congress and the Senate, have they really grasped the idea that we only have 1 million Bitcoin left? No, they haven't. And when you think about it, we live in a world where like companies all the time just issue more stock. We'll just print more paper. Companies do that all the time. Apple wants to issue stock. Google wants to issue stock. MicroStrategy is issuing stock, but at least they're buying something like Bitcoin that is scarce versus issuing paper and then get money from your stockholders and investing in something that's going to take forever to create an ROI. So you're dealing with a marketplace that is still very, very new to Bitcoin, very new. And you're dealing with government institutions that move very, very slow, but most of them don't have a clue what Bitcoin is. They don't have a clue. So for them to grasp that there's only 1 million left, they don't get the concept yet. And so when somebody starts pulling the trigger to buy some, hopefully it's the US with budget neutral strategies, you have countries that are noticing now and going, we got to do something about this. We got to do something about this. And there are countries that are moving, and the institutions are moving slow too, because how many of these fund managers, how many of them really know? Of course, Fink is talking about you could potentially allocate 1 to 2% initially started of pension funds and institutional money into actual Bitcoin. Then he changed his tune to 2% to 5%. But are people really picking up on the knowledge now? Are they really picking up on it? No. They're not fully grasping it yet. So you have a wheel that's moving slow. But when you look at all the pressure that's pushing on this wheel right now, Bitcoin with a limited supply, it's got to pop and go somewhere soon, right? And how long that's going to take, I don't know, but it's got to pop sometime in 2025. It has to. With all this pressure and all this new things moving in, all news coming in, like GameStop's coming in. But again, like GameStop news happens, and to my knowledge, they haven't pulled the trigger to buy yet, right? So it's something that's going to happen. If you and I decide we're going to pull the trigger to buy, we transfer a little bit of money, we buy. A little bit different with these companies and these organizations. So it's a different game. It's a different game, but it's a very good indicator for what we're seeing. Like, it's super exciting to see what's happening. So you got people like you got stuff like this going on. You got Van X. What Matthew Seigel says, that Bitcoin isn't just a store of value; it's a magnet for capital. And then we've got what's going on in the marketplace with some indicators from whales that you got whales that there's just been some news that $2.4 billion have come off the exchanges. This is March 25th news that about 27,000 Bitcoin were pulled off of exchanges, which is $2.4 billion worth. So the translation is that whales are not selling from this news. They're stacking. And there's a single whale that bought 2,400 Bitcoin worth, which is 200 million in one day recently. And then we have 8 straight days of inflows into ETFs. This is as of the other day. So we know we had some outflows as well, I think yesterday. But there were 8 straight days of inflows prior to that of 869 million. And so the supply is drying up. The demand is rising. Now, I know there's news floating around too that People are looking at shorting GameStop, that some whales are thinking about shorting Bitcoin at the $88,000 price point. So, we'll see. There is a resistance level that we got to pop through on this, which is about 90K. So there's a psychological resistance here. Why some whales are shorting right now, I don't know the answer to that. But I do know that there's some long-term holders that are still buying. Okay. GameStop, strategy, global adoption keeps growing on this thing. And so our next targets are 90K, 100K, and 138K. So Poly Market, they do a lot of polls on things, and it shows that there's a 75% chance in Poly Market that Bitcoin hits new all-time highs in the next 9 months. And some are saying 138,000. I think that's a little bit bearish by the end of 2025 personally. But we have key support levels. We have some resistance we got to pop through at about 90K. And then we've got some support levels of like 73,000 and 69,000 of the support levels. All right, so we got to bust through 90,000. Is that going to happen this week? Some are talking that this is going to happen in April, after April 2nd, or so in the month of April. We will see what is actually going to happen. Okay. So again, why are we struggling to get back through $100,000? It is true that banks are cautious. It is true that some wealth managers are still holding back. All right. And we do know that, let's not forget the bullish signs earlier in the year of the ETFs. That was a big milestone. The strategic Bitcoin reserve is a big milestone. And the cool thing with the ETFs is, as you know, before there were these spot ETFs like BlackRock, like Fidelity, like ARK, all of them who have Bitcoin trusts, ETFs, they're actually holding real Bitcoin. So we know that every time stuff pours into these ETFs, it's actually real Bitcoin that's being held by these companies like BlackRock, Fidelity, and ARK. Okay, so when you buy the ETF, they actually buy real Bitcoin for you behind the scenes. Where in the futures market before, they weren't buying real Bitcoin at all, right? So we know we have a real demand going for Bitcoin. We know more buyers equals less supply. Eventually, the price will go up. We're all sitting here going, come on, get the price going up. I want the price going up. But there's some good things happening in the marketplace right now, which we're all excited about. Okay. So, and the big money, let's talk about the big money here, because this is relevant to the products that just came out with Strife and Strike that MicroStrategy just issued. You have wealth managers, you got pension funds, you got banks. I mean, they all have compliance hoops to jump through, just like the US government. Massive compliance hoops to jump through. So all of this still needs internal approval before many of them can get the opportunity and the approval to go buy Bitcoin. And you got banks and wealth managers that are still cautious. I mean, let's not forget, with the previous administration, banks were like, forget about Bitcoin. They weren't even recognizing Bitcoin as a real asset. So many banks still don't trust Bitcoin fully. A lot of the wealth managers fear the volatility. What happens if I put my client in it? Blah, blah, blah. I even know this because, some of the assets from my stepmother that, my brother's the trustee of, and we're working with the other trustees. And so in doing this, we're like, hey, let's put a portion of it into Bitcoin. Let's take 1 to 3% of the portfolio and put it into Bitcoin, because that would actually hedge inflation over time and would be a smart move over time. But of course, you got some of these trustees that are sitting on these in the management of some of these accounts. They're older, they don't understand it, they move slower. So even in a one individual case of money that's being managed, these people move slow. Now you're talking about pension funds that are in charge of billions and billions of dollars. They're moving slow, man. So it's just a slow burn. So the whole message is the infrastructure is set up. Now it needs to be filled up with capital. And that's the bottom line. And we have people questioning, will the Fed lower the interest rates? We know that that's coming up sometime in 2025. It looks like it might be two lowering of the interest rates at 2 times. Is the economy stable? We still have the tariffs in question. So we have a lot of things that are in question right now. The rise isn't instant right now, as we see. We've been shopping in the zone for a long time, and I get it. People don't like it. They just want it to take off. But we have the infrastructure set that we never had before. And just take a look back. A year ago, we didn't have ETFs. All right. We didn't have spot ETFs for Bitcoin. Months ago, we didn't have a strategic Bitcoin reserve. All right. A year ago, we didn't have companies following MicroStrategy's playbook like the Maras of the world and the GameStops coming in. We didn't have that. We didn't have states that are now applying to have strategic reserves. We didn't have other countries that were getting on board heavily like they are right now. So we didn't have these things before. And so there's some big things coming up now with regulation called the SEC roundtables. It's starting on April 11th, and there's going to be some roundtables to discuss custody of Bitcoin or custody of these assets, DeFi, tokenization. And all of this is good because bringing regulation and bringing clarity, as Saylor always talks about, is really good. And the more we have clarity, the more there's regulation, the more it's going to unlock new capital in the marketplace. Okay. So this is going to let institutions go all in, and these things have to take place, right? The SEC has to weigh in on these things. We know that Bitcoin is a commodity, which is a really good thing. Line in the sand. It was great when Gensler said that in the prior administration, but the problem when Gensler said it was he's like, Bitcoin's a commodity, and then he attacked all the other cryptos, right? So like it looked like a pro-survival thing, like we're moving in the right direction. All right. Bitcoin's it is now officially a commodity. Okay, let's go after and take down all the other crypto in the marketplace. It's not a good thing, man. So while it looked good, it's actually real news now that the SEC is taking time to look at these things and look at what is going to be a commodity and what is going to be a security. And I think we're coming to the point where we know Bitcoin is a commodity, and then you have all these other cryptos that are not decentralized. They are not truly decentralized from my perspective, okay? So we're going to have a classification perhaps of many things becoming securities, maybe, or maybe they'll be commodities. We'll see what the general ruling is on these things, okay? Also, news that happens on North Carolina, they may invest 10% of public funds into Bitcoin. France's blockchain group, they just bought 580 Bitcoin, so that's cool. BlackRock, they just launched a Bitcoin ETP, an exchange-traded product in Europe. And then you have South Korean lawmakers. They hold nearly 10 million in crypto right now. So this isn't like fringe anymore, guys. This is global. All right. So at the end of the day, let's recap a little bit with strategy and end off with our favorite stock. This is not financial advice, not tax advice, not investment advice for anybody listening to this. But we have a company like Strategy right now that's probably valued around $80 billion. That has 40-something billion dollars of asset on their balance sheet. They have pioneered corporate Bitcoin adoption. They set the standard that other people's are following. And we know they just launched Strike and they just launched Strife. So here's like a simple version of what these two things are, okay? So first thing is when you hear these products, it's like, who the hell is buying these things? That's the first thing. So one needs to understand first what they are, and then two, who's buying them, because I'm interested in that. I'm like, who's buying this stuff? I want to know who, all right? So number one, you've got big institutions that are buying this stuff. So when I talked about strategy before, what I think is really interesting about what's happening right now is if you see the genius of what Saylor's doing, and really the fact that Saylor's setting us up for an incredible run. So hold on, I want to make sure that I'm back on the screen. I think I got disconnected for a second. So Saylor's setting us up for an extraordinary run right now, and I just want to point this out, okay? So when you look at he's opening up products for institutions, and this is huge. So the brilliance of, I think, his strategy in 2025, just from my viewpoint, is, if you look at issuing common stock, like he was doing a lot of in 2024. We have tons of retail investors, lots of us pouring in and buying more Bitcoin. And of course, there are other players buying Bitcoin as well. We know BlackRock owns 5% of Strategy. So, but with these new Strife and Strike products, it's bringing in institutional investors. So I think the brilliance of 2025 is, not only did he set up Strategy to be acquired by people like us and people all around the country and the world, but now in 2025, he set up the game so institutions can truly pour into Strategy. Because a lot of institutions aren't going to load into Strategy in common shares and be like, we're going to accept this volatility of the ups and downs. They're not going to. They're not going to put big dollars into this, like pension funds and things like this. For the most part, there are exceptions to the rule because we know there's teacher funds that have invested in Strategy, all right? But if you look at what he's done right now, which is so brilliant, is he set up the way for institutions to invest. And that's a big deal. So you have hedge funds that have an opportunity to invest in these products like Strike and Strife. You got insurance companies, you got pension funds. And what they're looking for is they're looking for a steady income. So they're looking for 8% returns and 10% returns, which is what this product is offering up. And so preferred stocks, and the reason why these are hot in the marketplace, they are safer than regular stocks, but they actually pay more than bonds. So people are looking to be a little bit more aggressive, like these pension funds that want to be aggressive, these hedge funds that want to be aggressive. You talk to hedge fund managers, if they're giving some of their clients 8 and 10% returns, their clients are pretty happy for the most part. But so you're looking at this and they're looking for higher returns, which is why they're interested in Strife and Strike products. So you also got rich individuals like wealthy investors, family offices that are looking for these types of products. They want high returns, but they want less risk than Bitcoin. And they certainly want less risk than Strategy's traditional common stock that they could buy. So what they're doing is the funds, they're looking for income funds that focus on dividends and steady cash flow. And so that's why they like preferred stock, because preferred stocks tend to have these fixed payouts. So in looking at what Strike is very simple. It's the first one that he came out with before Strife. It's STRK if you want to look it up, and it pays out 8% income. And later on, you can convert to stock for an upside. But when you convert to the stock at the upside, you're going to get nowhere near the upside that one would get by holding the common stock. And that's really important. So if you're looking at this going, well, I should be involved in Strike and I should bet, I'm not going to invest my money in Strike. I'm not interested in it because I'm interested in the high volatility of Strategy, right? That's what I'm interested in. So with Strike, it gives you an opportunity to get this 8% kind of fixed income payout, and then the option to convert to stock at a later point. But when you convert to stock at a later point, let's say when MicroStrategy hits 1,000, when you convert there, your upside potential is not that huge. It's bigger than your 8% payout, but it's not that huge. Make sense? So then you have Strife, which is a different product, and it's paying a 10% income. And I think what Saylor did, if I'm going from memory, instead of 10%, the way that he issued it recently to get more demand was, I think it might be even paying out at 12% right now. But you're getting more of a fixed income payout on this. And so with Strife, there's no conversion opportunity into stock, into common shares at a later time. So it's just strong, steady cash. And so both of these actually attract people who want Bitcoin exposure, and they want the exposure without buying Bitcoin. Make sense? And I think some of these fund managers, this is a personal opinion, hey, like, it's cool, you're buying into Strategy, like this stock that's trading with the Mag 7 stocks, right? That's up there in trading volume with these stocks. You own a piece of Strategy right now, right? They own a piece of Strategy, but not like you and I own Strategy, right? Okay. We're rocket ship Strategy. They're like plane Strategy, like the plane that's just flying consistently with a high velocity, right? But we're rocket ship Strategy, those of us who own common shares. Okay. So that's the gist of what's going on. I think they're doing equity raises that are smarter than 99% of Silicon Valley out there. I mean, what they have in their playbook is freaking genius, man. Genius. And companies like this that are owning Bitcoin on their balance sheet are going to be worth, some of them are going to be worth trillions and trillions of dollars in the future. Trillions of dollars. And let's not forget that I think Bitcoin is the US's only, it is the only strategy on the table right now, no pun intended. But I think that the strategic Bitcoin reserve is the only strategy on the table right now that will actually get the U.S. out of debt in the future. And the U.S. could, in the future, if they put Bitcoin on their balance sheet, if they do what Lummis is proposing, if they do what the world thinks they should do, which is buy 200,000 Bitcoin a year every year for the next 5 years, and they have a million Bitcoin, not $1 million, $1 million Bitcoin, that eventually that could grow over a 20-year period, 10-year period, 20-year period, and eventually, instead of us being in a deficit, we would have a surplus of freaking money. Imagine that. Okay. And the idea of like the fact that we're with this whole effort with Doge to, to save money, which I think is phenomenal, and to reimburse taxpayers like an average of $2,000. I mean, great. We're going to get a reimbursement of $2,000. It's great that we're cutting the deficit and the debt, but that's like, it's not even making a dent at this point. Right? We're $36 trillion in debt. We were $33 trillion in debt last year. Do the math. We've gone up by almost like a factor of like 8% in the debt column. Huge amounts of debt. We have no way in the US of getting out of debt. There's no way. You can do all the budget cutting you want with Doge, which I think is brilliant. all the budget cutting you want. But like the only way I see to get out of debt is they need to buy freaking Bitcoin, and they need to do it fast, and they need to throw it on the table, and they need to cut through the tape and the bureaucracy, which we know is taking a long time, and just freaking do it. All right. So that's it. That's what I have to say. So what did we learn today? We learned about digital energy today in a recap. All right. Fascinating. Of what Saylor's been talking about all this time is about energy. And you take your energy and you put it into a network like Bitcoin, and you store your energy in this monetary network, and you store the monetary energy, and the value of your energy goes up, which it should. It doesn't make sense that one would work so hard, put their energy out through the entire day. You get to the end of the day, you've made some money, you got some monetary energy in dollar bills, and then you put that into assets that, because of inflation, don't make any money. And that's what's happening. I feel so bad for a huge percentage of the population that doesn't know this, that's making 7% a year and thinks they're getting ahead. Hell, you ain't even getting ahead with 10% a year. So the beauty of like the preservation of energy, which is perhaps what this entire network is about, is the fact that we get to take our hard-earned energy that we get exchange of dollar bills for, and we put it in the damn Bitcoin network. And instead of it eroding our hard work, we now have a value that can be shown for it, which is called Bitcoin, which then can increase over time. And our energy that we've exerted in our daily life, there's dividends that are paid for our hard work. Imagine that. Imagine we're being traded like a stock right now, where we can pay out a dividend for our hard work. Right now, with our hard work, all that's being paid out is a freaking deficit. There's no dividend. When you put into Bitcoin, in the future, you're not actually getting a dividend, but in the future, you're getting an energy dividend, is what I'm saying. You're getting a return on your energy, which is freaking amazing. Okay. And that's the beautiful thing. And so that's the wonderful thing about being able to preserve our hard work. So we talked about that today. Institutions are following strategy. It's no secret. GameStop's jumping in. Let's not forget, back in 2020, Tesla jumped in. I remember what big news that was in. We saw such a huge price jump when that happened in 2020. For those of you who own Bitcoin then, is 138,000 a real possibility? The poly markets are voting on it, 75% likely in 2025. I think that is a bearish case scenario. I think we're going to go higher. And we see Bitcoin's going mainstream globally. So that's basically what I talked about today. I hope it serves you. I hope you're enjoying this. I think it's fun to jump in and do this stuff. And it's just fun to just, we all get our education up on things, and we all continue to improve our knowledge of these things. And the more knowledge we get, the better it is, right? So we got Remy saying the central bank has to print more money. Bitcoin goes up. Yes, the central bank. I hear you on that. 17% of Tesla earnings were due to Bitcoin appreciation. Oh, interesting. Okay. That's pretty cool. I didn't know that, Remy. 17% of Tesla earnings were due to Bitcoin appreciation. That's pretty damn cool. We have a raising cap. So Bob says Strife is going to be so good. I so agree that, right? Like Strife is going to be so good, and so is Strike. So that's super good, super good. P Drizzy says, let's freaking go. And MicroStrategy. We got Remy saying Strife 700 million, Strike 10 million. Beautiful. ATM 500 million. GameStop 1.3 billion. Yeah, look at all the good news coming in, man, huh? And Bob's like, what a weekend. Can't wait for Monday. It's exciting. So listen, if we're all in the same place, right? You know, we want to see this thing go up. And I think the more we can look at the facts of where the price is, and not ignore reality. It's like, let's confront reality. The price is not where it was when it was at 109,000. Let's confront reality and the fact that we expected to be higher by now, right? According to previous trends and previous bull runs, we expected that we were going to run in February. We were going to run in March, and we haven't. And that's what we expected. And so I can totally get that there is disappointment. I totally get it, right? And I do agree with you, Remy. We do need to be patient, because we are extremely early. And I think we just said there's a new infrastructure that's been laid out. And so anytime you have a new infrastructure and new buyers at the table, this is not the same game that it was in 2020. It's not even remotely the same game right now. It's the same asset, but it's not the same game. You have new players at the table right now. And when you have new players at the table, you play the game differently. And that's the game we're in right now. I mean, go back to 2020. Do you all remember what the game was? I mean, we were thrilled, like through the roof when Tesla decided they were going to buy Bitcoin. It was like, oh my God, amazing, right? Now we have players like GameStop coming in to do stuff like this. We have players like Mara in the game. We have many, many companies that have done this now, and more companies that will. We didn't have these institutional products this strategy had then. We didn't have the ETFs then. We didn't have strategic reserves then. We didn't have any of this. So the entire infrastructure has changed. And the adoption, particularly of the ETFs, let's not forget this, the barriers to entry have been dropped. So you don't have to go go set up an account through Coinbase or any of these exchanges anymore. Like your average investor who just wants to go into their stock account and buy an ETF can do that now. And retail will come back in hard because retail jumps in and historically retail jumps in heavily when the price starts booming, right? So retail is going to FOMO back in, and that's going to happen as this price starts going up. So not financial advice, not tax advice, not legal advice. Hope this serves you all. And I'm excited about the future, and I'm excited that you're all here, and I hope you have a tremendous day, and I hope things are going well for you, and I hope life is going well for you, and business is going well for you, and family, and all those good things. So have a great rest of the day. Share this with a friend if you thought it was valuable. Hit the like button. I'll see you guys on the other side.